Discount marketplace Wish just had its IPO on Wednesday, December 16th, 2020 at $24 per share. Shortly after trading opened, the stock price dropped significantly, and many people are saying it's going to have a hard time competing with companies like Amazon, Alibaba, and JD.com. But the CEO thinks otherwise.
I think our focus has always been markets like Europe, where nearly half of our customers come from. Places like the United States, we're an American company headquartered in San Francisco. That's where our first consumers came from. I think, look, Alibaba has done a tremendous job focusing on their own domestic market. We are very much a global company with consumers and vendors around the globe.
So with that being said, in today's video, I'm first going to break down Wish's IPO, their IPO price, how much money they raised. After that, I'm going to go over what their CEO said in an interview with CNBC Squawk Box shortly before their IPO. And at the end of the video, I'm going to go over what I think of the stock moving forward, whether or not I'm going to invest in it, and what I am going to do. For those of you who are new here, my name is Michael. I'm a 21-year-old investor, entrepreneur, and full-time college student. In the past 30 days, I've made about $175,000 in one of the many investment accounts I share with you in our private group on Patreon. We only have a limited number of spots left, so if you'd like to know what stocks I'm buying, what stocks I'm selling in my personal investment account, if you want exclusive content that I don't share on YouTube, and if you want pre-release access to my new show called The Stock Room, where I talk about stocks with my 80-year-old friend who is a millionaire, investor, and entrepreneur, well, then make sure to join our group using the link down below. So, Wish IPO'd at a price of $24 per share to raise $1.1 billion, giving the company a total valuation of $17 billion. Wish had planned to sell 46 million shares in the range of $22 to $24 per share, so their opening price and IPO price of $24 per share was at the high end of this. Due to the recent hype with the IPO market with DoorDash, Airbnb, and other companies, it makes sense that they IPO'd at the high end of their range. DoorDash and Airbnb saw their stock prices jump over 100% from their initially supposed to IPO at, so many investors were thinking this possibly could happen with Wish as well. So that's why they priced it at the higher end. The company, for some numbers, had reported $1.7 billion in revenue for the first 9 months of 2020, ending in September, which is up 32% year over year from $1.3 billion in the same time period last year. So 1.3 last year versus 1.7 billion this year. However, their net losses grew to $176 million in that time period versus last year where they only had net losses of $5 million. So that is a huge difference, and many people are concerned about if Wish will be able to become profitable, what their plans are moving forward to become profitable.
When do you see Wish becoming a truly profitable enterprise?
Yeah, first of all, thanks for having me. Look, I think as long as we focus on our core value proposition, delivering value for our customers, creating a fun shopping experience on mobile, focused on value, the most bang for the buck. Think, TikTok for shopping, and an easy way for manufacturers, digital vendors, brands to reach a global consumer base. We will have opportunities to become profitable in the future, but in the long run, I think the key is to continue driving as much value as possible for both of these participants. Despite sort of a very unpredictable year, not just for us and other e-commerce players with pros and cons, but for everyone.
Currently, Wish's main goal is not to be a profitable company, but is to grow as fast as possible. Currently, Wish's main goal is not to be profitable, but is to grow as fast as possible. Get as many orders per day, get as many users as possible. And that's what many startups aim for. Their mission when they launched the company was to bring an affordable and entertaining mobile shopping experience to billions of consumers around the world, and they're focused on democratizing mobile commerce by making it affordable and accessible to anyone. In this interview on CNBC Squawk Box, their CEO explained how TikTok helped the company a lot because TikTok is a global platform mainly based in Asian countries, and it also started to move heavily into the US and Europe. Now it's just a global platform. So with that, they've received many orders, tens of thousands, hundreds of thousands of orders from TikTok, and they've really benefited from this. TikTok is now making it easier for users to shop on their platform, and this is really generating significant amounts of revenue for Wish as well. On top of this, Wish had explained that they are basically an online marketplace for discounted goods, ranging from cheap homewares and apparel to electronics and toys. They offer a lot of products at a very low price, and many people are comparing it to a sort of a dollar store, but the CEO thinks differently.
Look, I wouldn't necessarily say dollar store. Our order values are probably much higher than that. But look, we focus on value. We focus on bang for the buck. We focus on delivering as much value for our consumers as possible. And that's served us well. And we believe that this is an underserved demographic. And we feel that this is a growing TAM, not only in terms of e-commerce, but e-commerce on mobile and e-commerce in the value-conscious segment. And the more that we continue to focus on giving our consumers the most bang for their buck, the better the value proposition and the platform resonates with them.
Their CEO talks a lot about delivering value, bringing the most value to their customers. They see that as offering low prices and decent quality items. But in my opinion, Wish is like a dollar store online. They sell very cheap items. They're not known for their quality, and you can't really compare them to an Amazon or something like that because their quality is much, much lower than something you would get from Amazon. Amazon, you could trust their quality. A lot of people from Wish, they order something and the quality isn't as good. That's not to discredit Wish. It's just a very different platform from something like an Amazon. However, Wish does have over 100 million monthly active users worldwide. They have active users in over 100 countries, and they have a catalog of more than 150 million items. They work with over 500,000 retailers and small shops all across the globe, and they sell 2 million products daily. So they're doing a huge amount of volume every single day, 2 million orders a day. They're consistently growing, but they actually didn't grow as much as expected during the third quarter this year.
COVID has, as we know, just turbocharged e-commerce growth, particularly here in the U.S. Right now. And yet when I look at your numbers, it looks like Q3 revenue growth actually moderated somewhat. Why was that the case? How do you turn that around moving forward?
Yeah, Morgan, that's a great question. Look, I think the important thing to remember is, of course, there's a lot of sort of positive momentum based on consumer and consumer shift in demand and lockdown of retail and obviously stimulus, which helps all of e-commerce. One challenge that we specifically face is we have a sort of global merchant basis and a global sort of customer basis. And typically, prior to COVID, in terms of our logistics partners, the way that we transported goods was in the underbelly of passenger aircraft. And as that became really limited, we had to give our logistics carriers and ourselves a little bit of time to adjust. So in a way, that moderated our growth, but we feel very good about where we are now.
While the CEO explained how they experienced slower growth in Q3 of 2020 due to supply chain and shipping and all of those aspects, in my opinion, all e-commerce companies were facing those same challenges during the virus and the pandemic. So that isn't really an excuse they can use because all of their competitors were also growing much faster than anticipated and grew a lot more. So Wish saying that they had to deal with all these supply chain issues and shipping, really any company that shipped internationally experienced these same problems. With that being said, though, Wish is a company that tens of millions of people enjoy on a daily basis. They're generating significant amount of revenue. They're continuing to grow, but they do have a couple of major hurdles with competitors like Alibaba, JD.com, and Amazon.
You source most of your goods from China. There's always concern about increased tariffs. And I know as well there's some concern now about postal rates there. And an increased costs for the company as a result of that. How significant is that in terms of upending sort of your business model?
Yeah, so this is something that we've been paying attention to for quite a while, and we have a solution. This is why our core focus for the last 2.5, 3 years has been particularly on establishing our own logistics network. We feel we actually turned that into a massive advantage. We actually think that we can do cross-border shipping. And more specifically from a place like China, the manufacturing hub of the world. Even my iPhone 12 is still assembled in China, to places like Europe, North America, and elsewhere. And now we feel like we not only have a competitive advantage in terms of procurement on the sort of cost side, and the cost structure of the product and the inventory, but also on the way that we can deliver it. Again, focusing on giving our customer the value proposition they're looking for, which is probably not as convenient or as timely as sort of other platforms, but they get to save a lot of money. And based on everything that we've done, and in fact, COVID accelerating that, we feel we have a big competitive advantage in sort of our cost of fulfillment as well.
So essentially, Wish is where you can get extreme value for your money. You get very cheap products. They're not delivered the fastest, but you do get a lot for your money, the most bang for your buck. This company IPO'd at about a $17 billion valuation, and where it's at right now, I'm probably going to hold off a bit before investing in it. I want to wait a couple of weeks after the IPO, let the stock settle. That's normally what I do. I usually don't invest right after an IPO, and just because of everything going on with the virus and the pandemic, vaccines being distributed, and everything else right now that could affect their shipping and distribution, I just want to wait a little bit before I make a decision on whether or not I want to invest in Wish. It's a great company. They are growing very quickly. 100 million active users is great. 2 million orders a day, that's great, but I just need to wait a little bit, see how much they're growing, because they're still valued pretty high for what they're generating right now. But I hope you guys enjoyed today's video. That's what's going on with Wish and their IPO that happened on Wednesday, December 16th, 2020. Don't forget to get your 4 free stocks, each valued up to $1,600, when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you next time.